Welcome to episode 8 of Simplified Trading Strategies from Market Secrets. Today we are going to learn about Pennant Pattern. So far we have seen 7 different trading patterns and I hope you have liked it and understood it. This week let's learn about a trend continuation pattern which is Pennant Pattern. Pennant pattern is drawn with two trend lines that eventually converge. A key characteristics of pennants is that the trend line moves in two different directions. That is, one will be a downtrend line and another one will be an uptrend line. There are three major parts which forms the pennant pattern. Number one, a rising uptrend line. That is a trend line which is rising, indicating that buyers are not willing to let the prices go down. Number two, a falling downtrend line. This is a downtrend line which is falling, which indicates sellers are not willing to let the price to rally. And number three, the price sandwich. The price should be sandwiched or trapped between these up and down trend lines, making the price to consolidate. So these are the three different parts which forms the pennant pattern. There are a few things that you need to remember while trading the pennant pattern. Pennant pattern is very similar to symmetric triangle pattern that we have seen earlier, but there are few key differences. Number one, a symmetric triangle can give breakout to the either side, while pennant is expected to give breakout mostly on the side of the prior trend. Number two, the pennant pattern needs a sharp rally before the pennant formation, which is not the case for the symmetric triangle pattern. So these are the two differences between the symmetric triangle pattern and the pennant pattern. So when it comes to the breakout of price in the pennant pattern, we can normally identify the potential breakout by looking at the previous trend. If the previous trend is up, then the chances of upside breakout is much higher. Similarly, if the pennant pattern forms in the downtrend, then the chances of downside breakout is higher. And lastly, the pennant formation represents the consolidation in the price between two rallies. And moving on to the volumes, as I always say, the volume is the most important thing that you need to check for in any technical breakout patterns. So when a pennant formation is being formed, volumes will be decreasing, followed by the huge increase in the volume when the price eventually breaks out. So let's see this with an example. So this is a perfect example of a pennant setup. So if you look at here, there are three major parts which forms this pattern. A rising uptrend line. So this is an uptrend line which is rising. So this indicates that the buyers are not willing to let the price go down below the trend line. Likewise, there is a downtrend line which is falling. A downtrend line which is falling indicates sellers are not willing to let the price to move up. And now the third part is price is sandwiched between these two trend lines. So the price is now trapped here and it is consolidating before the next up move. So when it comes to the pennant setup, these two trend lines will converge, and once they converge, the price might give a breakout to the prior trend direction. So the prior trend, the price was in an uptrend. So once these two trend lines converge, the price will break out to the upside. So when it comes to entry, target and stop loss, in an uptrending chart, you can enter into the trade once the price gives the breakout above the downtrend line. And the reverse is true for downtrending chart. So if you look at this chart, the price has given a breakout here and it also given a breakout here. But the most important part here is you need to look at the volumes. You should never enter before you see a huge volume. It will be an early entry. So if you look at here, the volumes is low in this particular section. But if you look at here, this breakout has happened with a huge volume. If you look at here, the volume is at its peak. So this would be your right entry. But even if you have taken an entry here, it would not have hit a stop loss. But this is the perfect entry. And the target for this pattern is arrived by measuring the height of the rally before the pennant formation. So if the height of the rally before the pennant formation, that is from here to here, is 100 points, then the technical target is 100 points from this particular breakout point. And when it comes to the stop loss, once the price has given an upside breakout above the trend line, this trend line becomes your immediate support. So you can keep the low of this entire zone as your stop loss. So your best stop loss can be here, but if you want a tight stop loss, you can place it over here. So this is the way you need to be trading the pennant pattern. If you have any queries on trading the pennant pattern, please drop it in the comment section. We'll be happy to answer it. Hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.